Okay, we're going to go ahead and get started. Thank you for attending our home buying webinar presented by Provident Credit Union. Our session today should last for an hour with a Q&A session at the end. During the presentation, you'll have the ability to send questions to our webinar staff through the web questions pane. Simply type in your question and click send. We'll address all Q&A at the end of today's session, and a copy of the slide deck will be emailed to all attendees in about a week. Our first presenter is Fatime Sengabe. Fatime, would you like to introduce yourself?
Good afternoon, everyone. Hello, this is Fatima Sengabi. I'm one of the mortgage consultants at Provident with 25 years plus in real estate lending. I am here to assist the first-time home buyer, move-up buyers, experienced buyers. Um, Through this webinar, we're going to be going over the loan programs that we're offering and also how we can connect and review your personal customized consultation. Um, Next, please.
Okay. And Michael Mendenhall is the realtor.
Good afternoon, everyone. Thank you so much for attending today's webinar. I hope you get a lot out of it. I'm lucky enough to have had Provident invite me in to talk about the real estate portion of today's webinar. And I'm equally excited to have Fatime here with us because she is a top-notch lender, and I highly encourage you to contact her as soon as you can after today's presentation. Thank you.
With Provident Credit Union, we are one of the largest credit union. We are the CTA credit union, originally, but we pretty much service the whole California. We have about 21 branches, mainly in the Bay Area as well. Um, and we are a safe, sound credit union. Uh, why choose Provident? We are one of, don't want to say too conservative, but because we want to lend and we want to take care of you guys. But I want to say I would say we're one of the A paper lenders. We're sound. We're, 5-star rating. We have been constantly on the Better Business Bureau as a sound credit union. And again, we are here to service our members and take care of you. Our goal today with this home buying webinar is to assist you understand the mortgage financing choices, define the process of the home ownership, and go over the process of how to purchase a home with the most favorable terms for you. Again, each person's goal is different, so we'll be consulting with you one-on-one and make sure that you get what you need out of this process. Um, Steps to successful home buying ownership. You are here, you're doing your portion of educating yourself on how to purchase a home. Number one step to be, to apply for a home pre-approval. So you know your buying power, what to expect for cost, what to expect out of your mortgage consultant, and what to expect from your real estate agents. Um, you're trying to get ahead of this, educate yourself, understand it. So when you get into the market, everything is going to start coming, the pieces come together, and you understand the process. The home buying steps, when we connect for the pre-approval, we look at the down payment power, again, review what to expect for closing costs, or there's no surprises, when you're in contract. Review your reserves requirement. At bare minimum, we do need a 2 months reserve requirements. As the loan amounts get bigger, we of course require more. But then we'll also tell you, how we can, use your retirement accounts as those reserves. Again, each person's scenario is different, and we'll look at that. With any purchase transaction, when you have your pre-approval, generally the normal closing dates are between 21 to 30 days. But when you have the pre-approval from Provident, that means we have verified your application, your credit, your assets, your income. All of that are in place. You literally just need to identify your property. And we can say, if you need to get into an aggressive offer, we can close it within 10 business days. Next, please. As far as the pre-approval process, we generally request for a completed application. We'll ask for 4 supporting documentation, which is your income, credit, debt, and your assets. And we ask you to please don't hold back. I mean, if you're receiving bonuses, if you receive commissions, please share those with me. If you receive RSUs, all of those are a part of your application. As of today, you no longer want to open any new accounts, close any accounts, pay off any credit cards, car loans. As of today, you have a mindset of a home purchase. So these are important. If you have done it till yesterday, that's fine. It's already done. But from today, let's connect. Let's discuss. Make sure that we can get you pre-approved for that maximum amount for the new home that you're looking at. And then if there's a room for improvement, then we'll review it together and see, if you pay off something, it may take your buying power slightly higher or whatever. We can discuss those. And if you have any savings, checking, 401ks, anything, RSUs, please do share those. It makes an easier underwriting for the file. Next, please. I think I just mentioned that. Please, again, do not buy any big items like cars. Don't close any accounts. Don't open any credit cards. If you are looking for a job, please be sure to let me know. Once you get your pre-approval, you may end up getting into contract in 1 weekend, in a month, but sometimes it may take 6 months or a year. And if you're changing jobs, please, when you send me an email and asking for updates, make sure to mention that. We don't want any surprises when you get into contract. Also, as far as moving money, from today on, again, you leave things where they are, because as you start moving money, we will ask for paper trail. We need 60 days of history on where the money has been. The simplest way is to leave funds where they are. Do not consolidate them and try to assist us and say, oh, I'm going to put, $100,000 in this one account. So I make it simplified for the consultant to verify the down payment. Again, we need 2 months seasoning history on these money. So please leave them where they are. As far as down payment, you can use gift funds, savings, stocks, bonds, investment, any overseas account. That we just need paper trail. And paper trail means we need to see where the funds, we need to verify the money came from. If it's coming from another country, we got to see, like, if $50,000 is cashed out of your overseas, for instance, from India, exactly $50,000 is going to end up in your Provident account. The same thing with the stocks. If you sell them, please keep paper trails. Next. We do have a variety of loan programs. The 2 main ones are fixed, traditional fixed rates, 15, 20, 30-year fix. And then we have some attractive adjustable, like we have our 5-5 program. The rate is fixed for 5 years. For instance, if you had a purchase contract today, we would lock it at 5.875. That's locked for the first 5 years. One adjustment on the 5th year anniversary relocks again for another 5 years. And this mortgage comes in a 360 months, which is a 30-year amortization or a 40-year amortization. Rates are the same. Just the 40-year is just going to give you a little bit of a cash flow per month. but the rate is the same. So again, you can choose either one of these loan programs, and we'll discuss these. As far as rate locks, at the pre-approval, we do not offer rate locks because it could be a weekend that you get into a contract, or it could be months. So we offer you rate locks when you are actually in contract, on the day that you present us the purchase agreement. Again, we'll discuss as you request pre-approvals, we'll discuss the loan program of your choice. We anticipate so you have an idea of what to expect. And we do ask you to come back and, if you need to reissue you need us to reissue the pre-approvals. You're checking in once a month. We're not running any new credit. We're just updating it simply. We just want to make sure that, the interest rates haven't moved too much on us. What to expect with the monthly payment for your mortgage. With the loan amount, generally there is a principal and interest that we collect monthly from you on the mortgage payment. If you put less than 10% down payment, we also are required to collect property tax and insurance on a monthly basis with your principal and interest payment. That's called an impound account or an escrow account. So we collect it and we pay them when they're due. Generally, the property taxes are due twice a year. Your first installment is due in November for 6 months. And then the second installment is due for another 6 months in February. And your home insurance will get renewed once a year. So when we're closing this transaction 1 year, it's going to get paid through escrow or by you. But then as we collect each month, we get prepared for the following year to pay that annually. If you put more than 10%, then you can control having the impound account with us, letting us manage that for you, or if you choose to pay it yourself. I think I'm going to go ahead and turn it to Michael for this.
Okay, thank you so much, Fatemeh. And again, the first thing you need to do after this webinar is to get yourself in front of Fatemeh to understand what your comfort level of purchase price is, because as a real estate professional, we can't assist you until you know that. All right, this is a closing cost buyer's net sheet. I'd like to point out in the state of California, we have what's called customary closing costs, which means county to county, city to city. It might be a buyer's fee in this city and a seller's fee in another city. Same with counties. So if you'd like to know who pays what in the city and counties that you're looking in, shoot us an email. We'd be happy to share that with you. But this one, we have a sales price of $1 million, mortgage of $800,000. They're putting 20% down, loan application fee $0. Lender fee $995. That's really good. Loan origination fee points. Points are optional in some cases. So 1 point equals 1% of the mortgage amount. Not saying that you're going to pay 1 point, but if you wanted to buy your rate down at the beginning before you close on the house, once you have an offer accepted, you could talk to Fatemeh about what would it cost to buy the rate down lower. Might be 1/8 of a point, might be 1/2 a point, but that's a discussion to have with Fatemeh. Tax service fee, make sure your tax is paid on time, $119. Credit report, $55 per person to look at your credit. Appraisal fee, $700. Could be a little bit less, could be a lot more. It depends on the size and type of the house. The appraiser is a third-party outside person, doesn't work for the lender. Okay, and so they go out and tell us, is it worth $1 million? Is it worth less? Is it worth more? Hazard fire insurance for a single family home, we're going to say $1,000, but we live in California, and I'm sure you've heard on the news that we have an issue with fire and hazard insurance on homes. So before you make this offer, contact your carrier, your insurance carrier, and tell them the address of the property, and they'll tell you what it's going to cost. PMI, okay, private mortgage insurance. Fatemeh touched on that. If you could put less than 20% down, it's a discussion to have with Fatemeh for the PMI. Impound accounts are optional. What is an impound account? This is instead of you paying principal, interest, taxes, and insurance every month, and then those times of the year when the insurance and/or taxes need to be paid, you can just send it all in one payment monthly to Provident, and they will make those payments accordingly when they come due. And I believe you earn a little interest on that, and there's no charge. Two one-time insurance policies. This is to protect the title of the property. When you purchase real estate, you're purchasing the title to that property. Now, if that property was become clouded, which means there's an issue with the title, after you move in, you have this insurance policy to protect you, and they will go to bat for you. So the first one is the buyer policy, and it's based on the sales price, $2,300 one-time fee. Second one, the ALTA, that's what we call the lender policy. And you pay that, and it protects your lender because they have interest in the property. They loaned you money, and that goes through the life of you living in the property. Escrow fee, same company that gives us the title insurance in Northern California also provides escrow. The escrow is handling all the paperwork. They are non-biased, meaning that they represent the transaction. They're simply there to make sure everything is in order. Recording notary fees, $300. Up at the top right, inspections. These are the most common. We have termite inspection looking at dry rot, wet rot, pest infestation, and plumbing leaks. Roof, that tells us the condition of the roof and the life expectancy remaining for that roof. Property inspection is an all-encompassing inspection. So where a property inspector, he or she comes out to the property and goes through the property from the top of the chimney to the crawl space under the home. They open, close, turn on and off. It's a very thorough inspection. Now, this inspection doesn't mean they're going to be drilling holes in the walls and going in with scopes. That's not that kind of inspection. It's just what's visible to them. Miscellaneous charges, these differ in each city and county, but our fictitious city transfer tax for this purchase price is $1,650, county transfer tax $1,100. Prepaid interest, this just means if you're going to get money for the home and you're not closing at the end of the month or the beginning of the month, you're going to pay for the interest remaining in that month, which is $82.19 because you're closing and it's 15 days towards the end of the month. Grand total, $12,701. None of this goes into down payment. This is just cost to close. Okay? All right, when I talk to first-time home buyers, second-time home buyers, or people that have bought 20 homes, I still tell them we're going to build a very effective educational home search. These properties are going to come to you based on the filters that we put in here, and you're going to review them daily, and then we're going to look at properties accordingly. Now, what you'll learn is that you might get more of something in one city and less of it in another, and this is how you educate yourself. And then we can adjust these filters as we see fit. We might decide we don't want to have something we asked for, or might change our mind, say we do want to have something. It's constantly being tuned so that it really meets your growing educational desires. So, first question I ask everybody is how long you can live in the property. And if they told me 5, I would write at the top of my page here 5 years. And then we go down and start asking questions going from left to right. First one is how many bedrooms do you require for 5 years? And if someone said 3, I'd say, okay, let's talk about the use of those bedrooms. And the reason we talk about it is we might figure out that, wow, we really need 4 the more we think about it. I just try and dig down and find out what your requirements are for those 5 years. Then the desires, you're neutral about something, and then don't want is a negative search. And we go through all parts of the home on the left there, as you can see, bedrooms, bath, separate family room, separate dining room, garage, carport. Appliances and systems that usually, not always, but can take 15 to 20 minutes because we're talking about kitchens. Talk about gas ovens, electric ovens, induction ovens, how many burners, refrigerator, how big will it fit in the home if the home's over 30 years old, probably a 20 cubic foot won't even fit in there. Then we talk about heating, air, gas, oil, electric. That simply means how is the air conditioned in the home? Is there a gas furnace, electric furnace? There's so many different types of heating and cooling systems, and some people, especially those with allergies, might have issues with some of them. City sewer and septic, we always like to talk about whether or not this house is on septic system or it's connected to the city sewer. We'll have that discussion. Washer dryer, that's a big one for townhomes and condos because not all townhomes and condos have an in-home washer dryer. Sometimes they have a community or mini community washer dryer rooms. And if that's not to your liking, then we'll have to talk to that particular HOA and find out if they will allow you to replumb a certain area of the home to install a washer dryer. So you can see, we just want to find out how important all these items are to you. Okay? All right, the exterior of the home. Roof. If you're going to be living in the house for 5 years, and let's say it's a single family home where you're responsible for your own roof, well, we want to know how many years are remaining on that roof. So we look at the roof inspection. If it says 10 or more years, it might be doable for us because we'll be moving out before a roof or a new roof is required. If it's 5 years or less, that could be an issue for us unless they're going to give us a break on the price of the home. Siding, this is aesthetics, stucco, wood, stone, fenced yards. How big or how are you going to use the backyard? Are you going to have swing sets, garden areas? In other words, how much space do you need? Frontages, what do you need out front? Do you like a big expansive lawn? Do you like very little with the house pushed up closer to the sidewalk? Pool's just in here to talk about things that 98% of the home buying population does not want. The top one is pool. Most people do not want an in-ground pool because it eats up the backyard. And you will sell your house for less if it has a pool in the backyard of a standard city lot because most buyers don't want them. I tell all my buyers, look at houses with built-in pools because there's very few offers on them. You'll get it at a better price. And even after you pay to have the pool removed, you should come out ahead. We would do all those numbers before we made an offer. So things that buyers don't in general want. They don't like houses where the rear is all concrete. They don't like houses where everything's dead. You know, pretty much buyers consistently don't like the same things. So if you can find something wrong with the house that can be easily fixed, you're probably going to get a better deal on the home. All right, architectural style. Okay, anything you would like. You might say, I like Craftsman. I like this type of home, ranch home. We can tell you where those neighborhoods are. Price range is really important. That can tell us which areas will work for us. HOA, anything to do with the homeowner association, we will go through in detail before you make an offer. And of course, what we're really looking for is to make sure they're financially fit and what the rules of the association state. Commuting times, that's last where we talk about where can we put you where you still have the least amount of time on the road, but you can get to your work, you can get to the kids' school, shopping, whatever those things are. And we look at a map and we decide what's the best neighborhood so that you don't have to commute so much throughout the week. Okay? Type of homes. Most of you are looking for either a single family home or a townhome or condo. Let's go through what a single family home is like. First, it shares no common walls, generally includes front and rear yards. Owner responsible for maintenance of property inside and outside. There's no one assisting you. Owner pays all insurance costs. So what are we saying here? We're saying you're the foreman of the ranch. You're responsible for everything. If you can't fix it, improve it, you're going to have to pay somebody. Now, shifting over to the townhomes and condos, or what we call CID, common interest developments, they share common walls. Monthly homeowner association fee. Now, that monthly association fee, part of it covers exterior grounds and building maintenance. So pretty much, with exceptions, you're responsible for inside of your unit, not the outside. The HOA generally pays for the master insurance coverage. That means the big policy in case a building gets run into by a truck, there's a fire, there's a flood. That is in your monthly HOA fees. Finally, again, review the financial health of the HOA before you make an offer. Okay? All right. Everybody asks me once we start to look at properties, where does the inventory of homes on the multiple listing come from? Well, first one, top left, foreclosures. If a property is foreclosed upon for non-payment, that particular lender will contact a real estate company and put it on the market just like any other home. There's a big myth out there that foreclosures are great deals. Not true. It's just a house for sale. It could be a good deal, but it does not make it a good deal. The next one to the right is probates. Anything where the legal system of the state of California is involved in the sale and close of this property is called a probate. There's many different types of probates, and I would advise that you have a real estate agent with a lot of experience before you get represented on a probate. Bottom left, corporate transfer. This is where employees are getting a promotion and they're shipped to some other place in the country to head up something. And the company is going to pay for relocation. Now, relocation means they're going to give them cash now to get out to their new location, and then they put the house on the market for them. And when it sells, they give the money to that employee. Now, if it sells higher than the money that they already have given them, they of course will get that money as well. What I do like about corporate transfers is they take place September through December for the most part. And they're generally employees that are doing well, being paid well, and they think, oh my gosh, I have an old 70-year-old home here in the Bay Area. I'm going to do all this work to it, update it, kitchens, baths, everything. And then they get transferred. Okay. So I always like to watch for these because they're generally in really good condition. Bottom right is conventional listing, and that just means market forces, that we're downsizing because the kids are gone. We need more bedrooms because we have more kids, that sort of thing. And that's where the properties come from. Okay. All right, so we built the home search. The home search will come to you 7 days a week, 24 hours a day. If somebody adjusts the terms, in other words, it was listed at one price and they lower the price, it will come to you again at the lower price. It's very sensitive. So when houses are listed, they'll be here first. They come on the market really quick. Up on the top right, you get the basics, the bedrooms, the baths, the square footage, the lot square footage, age, that sort of thing. The 1 second from the bottom on the top right is DOM, days on market. How long has it been up for sale? Now, do we believe all the information here? Absolutely not. We must verify all that information. That's your realtor's job to make sure that everything was done with permits and everything that they have up there, the numbers is correct. Now, down at the bottom, you have public comments. Public comments are all those things that we're saying about the property as agents that the seller has approved. They said you can put it on the internet, you can put it on the listing, you can hand out flyers, but this is what I'm limiting all the information to. Now, sometimes there's a lot of comments in there that don't make sense. And I will help you with that on the next slide, okay? All right, so be cautious of these on the left. All the property needs is a little TLC. And I often have buyers say, we don't mind a little TLC, and they're thinking carpet and paint. 99% of the time, TLC means the property is in horrible condition. So just keep in mind that before you race out to look at a property, make sure you look at the photos carefully. And if the photos are limited or done at a distance, be wary. Next one is great for first-time home buyer or investor. Two different buyers, first-time home buyer and investor. Okay, they both like the same property. Why would that be? Well, first-time home buyer might say it's a 65-year-old home. It's dated, the colors are dated, the tiles dated, but I'm going to buy it. It's in good condition for its age, and I'm going to live there, and I'm going to update it over time. And then when I sell it, I'll make more money. Good plan. It will work. Investor has the same idea, but it goes at it a little bit different. Look at the property, say we'll move tenants in immediately once we close. We'll rent it for 10, 15, however many years. Then we'll have the tenants move out and we'll rehab the whole property all at once and sell it. Contractor special and fixer-upper. Those two right there can easily mean cash only. And the reason for that is when the appraiser goes out there, if they find that the property in any way does not pass health and safety certification, they're going to point that out, and many lenders will not loan on the property because it's dangerous. Might be health, it just might be safety. There's so many things that could be wrong with it. When you see those two, be very careful. Now, if you have all cash, that's a good property to get into if you want something that you can fix up and have it done your way. If you're looking to move into a property that's in move-in condition, look for the ones on the right. Recently remodeled, new, renovated, move-in condition. Those ones generally, almost always, will be in super good condition. You may not like the way the floor plan lays out, something like that, but it'll be good. Okay? All right, so now that when you've gone through with your home search filters, you've been tweaking them and deciding you like this city more than that city and this type of house more than that type of house and your comfort price range, you're ready to buy. So now you got to step up your game. You got to go 7 days a week to look at homes. So I know that's tough for people, but houses sell during the week. It's not just a weekend gig. So what happens is a lot of people, they choose not to go out until the weekend and they lose out on homes. Now, if you have the ability to go after work, if you have children, maybe one of you go and look and then you switch off and the next day someone else goes and looks. But you got to try and make it work and get out there and view the properties ASAP because they will sell. Try to meet the owners of the homes you view. I'm finding more and more people are staying in their homes now when they go on the market. Since COVID, that wasn't a thing. And it's really taking a few years now for people to start feeling comfortable staying in their house when it's on the market. If that's the case, you like the property, try and meet the owners. Try and go when the owners are there. Because if you can meet them, that means a lot when 4 offers come in and they recognize your name on the offer. When you're in the property, look in, under, and over when viewing a home. That simply means be thorough. Okay. Yes, there's inspections, but take it upon yourself to say, I'm going to take my time. I'm really going to look at things, open and close, etc. Remove your shoes before entering a home. That has now become pretty much all properties. They're going to have booty baskets by the front door in most homes. I find those booties become disgusting within hours. I always tell my clients wear slip-on and slip-off shoes and just be prepared to buy yourself a new pair of socks if you're going to be looking at a lot of property. Do not bring a crowd when viewing. Okay, when you're initially looking at a home, just you and your agent. Now, if someone in your family's opinion is really important to you, bring them along. But everybody else take on a second viewing because the first viewing, you need to be focused. Okay? All right, when you're walking through the property, don't make negative comments about the home you're viewing. And sometimes what you consider not to be a negative comment could be. The reason I say this is most of the houses now have cameras. And when you walk through, someone gets pinged at their work desk and they're going to watch you walk through and listen to what you say. And you may love the property because of its potential, but sellers don't like to hear how you're going to knock the wall down between the living room and the kitchen and asking your agent how extensive of work would that be, what would it cost, that sort of thing. Have those discussions outside away from cameras. Again, don't bring a crowd inside when viewing the homes. Use the bathroom in any home you're viewing. That should say never use the bathroom in any home you are viewing. We're not supposed to do that. And a lot of people will think, oh, it's a vacant house. I'll just slip off and use the bathroom. They do shut off water in vacant houses quite often. So my advice is if you have to stop along the way, stop, but try not to use the homes. Okay? All right, second look. So this is just the start of my little second look list because I like to tell people if you like a house, let's walk back through it. In other words, yeah, we just finished 10 minutes in there. Let's walk through it again. Let's go slower. Let's turn on and off, open and close. Just look at everything carefully. Go into the bathroom, close the door. That'll tell you how big that bathroom is. That sort of things. So, what do the windows look out on? Who can look in through them? That sort of thing. Spend some time really looking if you think you're going to make an offer. Okay? All right, comparative market analysis. How do we determine what to offer? Well, first of all, realize that the list price means nothing. Okay, that's a fictitious number. You got to put a price on there to put the house on the multiple listing service. Doesn't mean that price is correct. So we pull all the activity in the same market of the house you're looking at going back 90 to 100 days. And we try to use data from same geographic area. That means same schools, number of bedrooms, number of baths, square footage. We try and get as close as possible. The reason for this is by looking at the recently sold real estate that's most similar to the one you're looking at, that gives us what we call a window of value. You have a high sale, you have a low sale, and you have everything in between. And the great thing about this is behind this page are photos inside and outside of all the properties. So you can actually see what they looked like, how big their lots were, how many days they were on the market, and more importantly, what did they sell for? That's really key. So if you go to the bottom here, you'll see under the sold column, there's 3 properties, okay? And 2 of them are 1,000 square feet. One is 1,040. That's either mismeasured or they added 40 foot, maybe a storage closet. And then over to the right, you have lot sizes and then the sale price at the very far right. The high was 1.6, the low was 1.2. That's a huge difference. So you want to see those photos and find out how do they compare to the one you're looking at. And this will help you determine what to offer. And more importantly, will help you determine will it appraise. Okay? All right, so the purchase agreements that we use two, CAR or PRDS. Either one is fine, okay? We always ask and defer to the listing agent which one would they prefer us to use. We look for the most recent revision date. And the fact that most agents now are doing this based on computers, they're automatically updated. So if the purchase agreements change, it'll automatically be updated. If somebody's writing this out in hand, go to the bottom of the first page and you'll see there's a revision date. And if that revision date does not match what you find on the internet, it's the wrong purchase form. Broker review. If you're working with someone who's new or newer and you say, it's my sister-in-law, but I'm a little nervous, she doesn't have much experience, that's okay. You can ask, who is she working under? Because she's going to have a mentor. It could be the broker of the office. It could be a training broker. There's going to be a number of people it could be. Then what you do is you go to the bottom of the first page, which is right in front of you, to the far right. You're going to find there's a little initial area, and it says reviewed by, and there's going to be an initial. So that means someone more senior with much experience has helped them make sure everything in this form is correct. Then you're going to talk to your agent about possible contingencies. And a contingency means I'm making this offer subject to the following contingency. Might say it's something as simple as seller remove all the firewood stacked on the side of the house. Okay, it could be as simple as that. Or it could be, you know what, you don't have inspections, or I didn't like your inspections, so therefore I'm going to have an inspection contingency. You might say I need a financing contingency, but with Fathom, you probably are not going to need that. Okay, you should have all that worked out. Lastly, what's not right here is the appraisal. You can say, I want an appraisal contingency. That means if the house doesn't appraise, it falls short of the contract price, you can renegotiate with the seller. And you could say, seller, we'd like you to lower your price to match the appraisal value. And you can go back and forth on that. Maybe you split it. Maybe you walk away from the deal. You have that option. If you do not have an appraisal contingency and it comes in less, all lenders will take the lesser of the two. So if its contract price says it's $1 million purchase and it comes in at 990, we have a problem, okay? And if you don't have an appraisal contingency, it means you've got to, belly up to the bar and make up that difference in cash or loan. So something to think about. That's why we do the market analysis so that we're confident of the appraisal. Okay. All right, the offer process. You and your realtor will decide what to offer based on the market analysis. And FYI, I never tell anybody what to offer. I simply tell them what I think might get us in there. You're the one that has to say, I'm comfortable with that price or not. Discuss possible contingencies, which we just talked about, to put in the offer. Your realtor will present the offer. You do not go to a presentation. Sometimes we will actually just do this on the phone. And if there's a lot of offers, that's the way they're going to do it. They're going to do a phone presentation. Seller will respond by accepting, rejecting, or making a counter proposal to your offer. You can accept, reject, or counter the seller's response. Now, if anybody would like a copy of the purchase agreement, a sample copy, I highly recommend you review it before you start getting serious looking at homes. Be happy to send it out to you. Just shoot me an email. Our contact information is in here, both Fathom and mine, and be happy to get you one. Okay? All right, finding the right real estate agent. If you don't have one, you say, gosh, how do I find one? Well, the questions to ask a real estate agent would be, what are the years of experience you have? What are the number of transactions in previous year? Buyer and seller representations in previous year, meaning how many were representing buyers, how many were representing sellers, and we're first-time home buyers. If that's you, you always fess up and say, I'm a first-time home buyer. So how do you help first-time home buyers? Good question. Another question would be, do they have the time? They're already working with a number of buyers. A first-time home buyer takes up the most time of any home buyer. So they better be prepared for that. And if they're a good agent, they'll tell you they do have the time right now or they do not. During your meeting, establish goals, determine a strategy. When are we going to look at properties, and develop a timeline? Hey, how about every week we talk about the search? Do we need to tweak it? Got to have a plan. Okay. And by the way, one thing I'd like to mention about finding the right agent is that if anybody needs a real estate agent, Anywhere in the country, I pay for a service to get the background information of anybody that holds an active real estate license in the entire United States. So I'd be happy to refer someone to you. Just need to let me know what you're looking for and where. All right, so your offer's accepted. Congratulations. Most transactions take about 30 days to close, sometimes faster, sometimes longer. There's a process, and there's a lot of things that you'll need to review, sign off on, so it moves quickly. Now, where are you? You're at the top. You're the CEO. Like any good CEO, you have no idea what's going on, but everybody down below you who's doing the work is explaining it to you as we go through the process, and you're learning, you're educating, and guess what? It's with assistance from everybody involved, it's easy process to go through, but about 30 days is typical. Okay? That's what an escrow task list looks like. You don't really even need to see it. It's just something that I look at every day when I get up. It's like, oh, I got to do this because it's due in 1 day. I got to do that. It's due in 2 days. And oh, I have something to send to you for signature and I need to explain it to you. So that's the things we do behind the scenes that you don't see, because really you're only contacted when you need to sign something, review something, and or you have questions for us. Okay? Until you get to the moving day. So we just shot Real Estate 101 through a fire hose at you. Hopefully it gave you a better understanding of how the process works. And we are here if you need to reach out to us in the future. Okay. And I'm pretty sure you're getting a copy of this presentation and our contact information. And we're happy to provide information whenever you need it. And it looks like we have a couple Q&A questions, Fatemeh.
Let me attend those. I only make 120. Do you think that the first-time home buyer? If you would please give me a call, can definitely review your scenario. And do I need to type this in or Amanda?
What's your question, Fatemeh?
You don't have to type it in. You can just answer. It's fine.
Yeah.
Okay, so the question is, I only make 120,000 a year. Do you think as a first-time home buyer with only 15,000 as a down payment and a student loan debt, everything example is over $1 million, and that is not me. Also, I heard that the first-time home buyers do not necessarily mean this is your first time buying a home. Is that true? Would you please contact me directly and I'll review the details of this, and then make sure that we maximize on that pre-approval or get you ready where you need to be to make that offer. And then the second one is also from the same panelist. I would still be able to buy a home only making 120. Also, what is the definition? We do have a debt to income ratio guideline. Just because you mentioned 120, we take that, divide that by 12 months. That's, about 10,000. We take about 40% of that. That's 4,000. The new home qualification with the principal, interest payment, property tax, insurance, if there is an HOA, if you have a student loan payment, we have to take all those to consideration, and the maximum monthly payment should be 4,000. That's what you qualify for. Anything above that, you're walking away from your comfort zone. And again, please contact me and we'll review this one-on-one in details. Any other questions?
Well, there's our contact information. So if anybody has questions in the future, and if anybody would like a real estate agent anywhere in the country, please reach out to me. And for your financing, Fatemeh's there.
Absolutely. You do have my direct phone number as well, 650-508-7269. And our emails is also available. Thank you so much for your time. We really appreciate it. Amanda?
Thank you, everybody.
Yes, thank you everybody for joining. And again, a copy of the slide deck will be emailed to everyone in about a week, including Fatima and Michael's contact information.
And thank you, Amanda.
Thank you, Michael.
Yes, thank you,
Have
Amanda.
a good day, everybody.
Thank
Have a
you.